Good morning, everyone. Welcome to the Flow Show, Thursday, 7th of August. It's BOE Day and it's Risk Day by the looks of things. At the moment, we've got a few headlines flying around between Russia and the US, possible meetings and whatnot. So we'll get stuck into that. It's also Boring Old England Day. The BOE is today. Looking forward to that one like a hole in the head. Morning, Kay. How's it going?
Morning, Ryan. Morning, everybody. Yes, it is Bank of England Day. Do we have a press conference, Ryan, at all?
Unfortunately, yes. It's a
Okay,
monetary policy report meeting.
Yeah, there goes the good morning into an average noontime. Yeah, for the rest, very excited as well because today we will have our webinar on risk later on.
Yeah, exactly. If Bailey stopped talking by then, I hope so. But yes, we've got that coming. I don't know if it's too late for anyone who hasn't signed up for it to get in. If you do, just head to our website, go onto this little button here, click that, sign up. You may be lucky enough to get the link in time for that webinar. Otherwise, there will be another email going out today, just in case you missed the newsletter, all the links. If you're not in our chat room and you signed up, you'll get the link to register for that webinar. So you have to register for the webinar as well. That's just the Zoom policy thing. It will be recorded, so if you miss it, you'll get an email with a link to the recording after. But this won't be going out publicly, so there's no watching it on YouTube Live or anywhere else. If you haven't got the link, you ain't coming in. Right, let's get cracking. Lots to get through this morning. Going to start with some data. And we had China trade data out this morning, which is the first, really some of the first data we get for July. On Tuesday, we had June data from the US. So this is a bit ahead of some other data. And the trade balance holding up well enough. Activity-wise, things are still looking good. Exports up a good chunk, 7.2%. Imports up 4.1% as well. We're expected to fall 1% and quite a decent move over last month. Now, this is all still part of the trade stuff. So we're still seeing some of this potential washing out, but from now on, we'll get a better idea of how trade is responding after all that front running. And if it's going by those numbers, activity is looking pretty good. However, Bloomberg have had their abacus out, their tea leaves, and they say that China exports to the US have fallen 21.6% year on year in July. So that's just showing you what's going on in real terms between those two countries. There's a few buzzing heads going off in Japan at the moment. Kyodo yesterday dropped a headline that the US is going to impose an additional 15% tariff on Japan imports, and that those tariffs will be applied regardless of existing rates. There's been a bit of confusion as to whether this is actually an add-on 15% or just the original 15%. I'm not sure where we are. We've also had Japanese politicians out from the LDP party on Adera saying that they're now seeing 15% tariffs on top of the existing levy, and Japan has got no exemption from US tariff stacking, which, as I say, got them all up in arms because they still don't know what exactly they're doing with this trade deal. Wakazawa's spending more time in the air flying back and forth between Japan and the US trying to find out what's going on. Kay, what is going on?
Well, I mean, yeah, we were talking about it in the room as well this morning, and then I went on a bit of a search and to find out if anyone knows. And the more I read confused people. So we have to know that nothing has actually been signed, from Japanese side on that U.S. Trade deal. The U.S. Seems to understand what they want, but nobody else understands what the US really wants. For as long as there is nothing put to paper, I'm not even sure the European deal has already seen something printed really. No, it's a big confusion in Japan, and it would be really bad for Japan if those 15% came on top. My understanding was, or my assumption was, that if you have a trade deal, all the rest is not applicable, right? You have a trade deal like we
Yeah.
understood last week, fifth or the week before, 15% on everything. Yes, they're still not happy. The auto industry is still not happy, etc. But I thought that would be a flat 15%. Then okay, end of chat. Now we see what further negotiations can be done because Akazawa, as you say, is constantly flying back and forth, taking care of his air miles. But yeah, it is. We are still in confusion, and now is with that LDP guy coming up saying that it is on top of on the rest. So it's very very strange. The thing is, if that would really mean that Japan is going to have to pay, or at least Japanese goods to the US are going to be taxed at a rate of 30%, that is going to be very nefast for Japanese business into US. I s- well, yeah, I mean, I still have doubt. I still think that it's going to be 15, but okay, who will tell? And then I'm wondering, do the U.S. Customs know themselves which rate they will have to apply when the Japanese goods arrive?
Yeah, maybe they need Trump's tariff board up at their offices to know what they're
Yeah,
charging. Who
that
knows?
that is actually since we are traders and we're looking at market moves, it is going to be a mover again in yen because this, assuming that Trump also comes up, or Besant, or whoever says like, no confusion, Japan, everything is 15. We may see the opposite reaction now and the yen gaining some. Okay, so we need to be a bit careful because any headline now can make the yen move quite a bit.
Yeah, exactly, and that's on top of all the risk stuff going on as well. So
Yeah.
yeah, lots to think about. PM Shiba, he may face one of his biggest tests tomorrow because the LDP are holding a joint plenary meeting, which will see members of both the upper and lower houses meeting. This is all LDP members. Lots of calls for him to go. He's still hanging on, so we could get a few headlines out of that. Maybe some decisions over what he's going to do. We'll wait and see what happens. We'll be waking up to that news, no doubt, tomorrow. A bit of data from Europe. We've had some CPI data out of Sweden, which is all looking a smidge warmer, shall we say, on some of the year-on-year numbers. Month on month, thereabouts, 0.2% on the month. Their headline was up 0.8, not as much as expected, but better than or higher than the 0.7 prior. Their CPI interest rate thingy also coming in a bit hotter. Over in Germany, industrial production in June looking a bit shite, coming in at down 1.9%. Trade front as well, a decent pickup in imports. It's not decent because you want exports to improve your trade balance, but seeing a big chunk of activity going on there and a turnaround in exports as well, though they'd like to see those numbers reversed between imports and exports. All of that had the trade balance coming in a little bit worse off at 14.9 billion. Speaking of Germany, the big auto association or manufacturing association, the VDA, says that the deal between the EU and the US has so far brought no clarity or improvement for the German automotive industry. So again, nothing on paper. Probably don't know exactly what's going on, but confusion reigns elsewhere as well, not just in Japan. We've had Fed members out as well. Fed's cash and carry says the economy is slowing. He's moving into dovish mode. It's still not clear what impact tariffs will have on inflation, the Fed needs to respond to the slowing economy. 2 rate cuts this year seem appropriate, but it may be appropriate to begin adjusting the policy rate in the near term. Well, they've only got 3 meetings left, so that points a finger at September. If inflation does rise because of tariffs, the Fed could pause or even hike. So he's covering all the bases there. Says wage growth is declining, which suggests the labour market is cooling. The unemployment number is very important, but the Fed knows revisions are possible. Fed's Cook and Collins were doing a double act last night. Cook says jobs data was concerning. Says big revisions can happen at economic turning points, and that a lot of businesses say investment is frozen in all things except for AI. Collins said uncertainty is leading to a wait and see approach to price setting. Fed's Daily was out again, bit of a repeat. She also has moved into the dovish camp, saying a policy adjustment is likely in the coming months. We can't wait for perfect clarity to act. Tariffs are unlikely to persistently boost inflation enough to warrant policy response. The labour market has softened and further weakness would be unwelcome. Monetary policy needs recalibration to align with the Fed's goals. Trump and the White House also slapped on 25% tariffs to India. This is all part of the Russian oil thing. So Trump's come out pretty quickly to hit India with that. Also, apparently saying that he could impose tariffs on China for buying Russian oil, although that might be a bum fight he wants to sit on for a little bit longer. We had the Swiss president, Karen Keller-Sutter, over in the US. She seems to have turned up pretty much unannounced to try and speak to Trump. Couldn't get him, so ended up speaking to Rubio. She said she had a good meeting with Rubio, though not much came of that meeting. A very terse statement from the White House on that meeting, just saying they agree that trade imbalances are the incorrect way to move forward, but nothing came of that. So she's gone home empty-handed. On the Fed, there's a sources piece saying that Trump's advisors apparently been pushing him to put in a temporary Fed governor to fill the vacant seat. And apparently that pick would likely have worked in government previously and been vetted by the Senate. They say a short-term pick would give Trump more time to pick his Fed chair. Trump himself says he's down to 3 candidates and he started interviews, doesn't think Bessent would take the Fed job. We'd already heard yesterday that apparently he'd ruled himself out, but sounds like Trump might have been bending his ear over taking the job. Trump says Hassett and Walsh are the leading contenders, which is going to piss off Waller, no doubt. Who's in the frame then? If Hassett and Walsh are leading contenders, Waller's got to be the other interviewee. Bowman, okay, left on the sidelines.
Yeah, probably. I would say so, because Waller was like kind of the first one throwing his hat in the ring, besides the 2 Kevins. I guess we should stick to those. There's a few others, but I've read a few other names, but then when you read their CV, they don't have enough experience yet in roles which are close to monetary policy setting as such. So I guess we're sticking with those 3 names then and see who Trump will pick. It's probably the one who shouts, who has been shouting the loudest in Trump's direction then, or the more dovish one. Waller would be an easy pick, but I think politically, maybe one of the 2 Kevins would have is a bit closer perhaps to Trump.
Yeah, potentially. Yeah, well, he's certainly been pushing his case, old Waller. But wonder what he'd do if he doesn't get it. But who will know? Right, moving on. Trump's had a little bit of a boost from Apple, saying they are going to increased their investment commitment by 100 billion. That takes it up to some circa 600 billion. And they're going to launch a new manufacturing plan. Trump was obviously shouting that one from the rooftops. We've had one of the major shipping companies, Maersk, CEO, talking after his earnings, saying that China is fueling demand globally, and that there's been a big pickup in shipping freight movements around the world outside of the US. So there's a lot of stuff going on. He says there's a bit of disparity between what's happening in shipping and GDP rates. So we could be seeing a bit of a boost coming for the global economy over the months ahead. So keep an eye on that and who's going to be the beneficiaries of that increased growth. Right, into this risk stuff that's going on this morning. So we had Witkoff over in Russia yesterday, and a Kremlin aide was out to say that the Putin-Witkoff talks were useful and constructive. The White House also said the meeting with Witkoff went well, that Russia was eager to continue engaging with the US, but that secondary sanctions are still expected to be implemented Friday. Even Ukraine's Zelensky yesterday said it looks like Russia is more inclined to a ceasefire. Now, this ceasefire, as has been reported, may just be an aerial ceasefire, i.e. they're not going to stop the ground combat, but they're going to stop lobbing missiles and drones at each other. But we'll wait and see if it's something more. US Secretary Rubio had more to say on this than on the meeting with the Swiss bod. Says progress has been made on Ukraine war talks, but key territorial issues remain. Today was a good day, but many impediments remain. It says key elements of ending the Russia-Ukraine war will involve territorial matters, but we now better understand Russia's conditions for peace, and that a ceasefire period could be used to find a long-term solution. Then we had the big old name, first deputy head of the upper house of Foreign Affairs Committee in Russia, saying that a Putin-Trump summit could be well prepared, and the aides are already engaged in preparations. And then we had another Kremlin aide saying that an agreement has been reached to hold a meeting between Putin and Trump in the coming days, and the parties have been working on the details, and that meeting might happen next week. So we've potentially got something happening in the Ukraine-Russia saga that's going to happen next week. Risk has been doing a bit better. It's not been taken off massively, but we've seen a shift that way. The euro certainly has been benefiting this morning from all that. I don't know if we're going to need to watch. Maybe the market will get a little bit too hopeful about this meeting. I don't think, based on past meetings and discussions, that we're going to get an end to the conflict next week, but we can but hope. So we could be set up for a bit of disappointment. Kay, what do you make of these latest developments?
Yeah, well, the market will probably trade on hope. The thing is, there's been from both ends. So now we heard from Russia, but before we already heard from Zelensky that there was kind of a hope building that some things may be moving. The problem, so let's assume that things move like in a positive direction, and then we're talking about an air truce. We know that even though Russia is claiming advance on the grounds, in what 2 months' time they are going to enter winter there, and it's probably going to be a stalemate. So the air truce will probably be the most important, because we know that there's like masses of drones flying around, hitting each other from on both sides of the border. So that would be a first, and a pretty decent first if you look at it from a market perspective, trading positive. The problem is that in between all those lines, we've heard not too long ago, and I think was it like over the weekend or end of last week, I don't recall exactly, But that Russia said that the demands remain the same. So once they are going to be sitting around the table, there's probably going to be a deaf man's conversation there, and because the one and the other will still want the same outcome, that is Ukraine getting back everything, the whole territory, and Russia wanting to keep at least what they got, which is partially where some very interesting stuff is in the ground as well, in those parts of Ukraine. So I'm not sure that we are going to get a solution, or at least not a solution that is going to be satisfying both sides. So there is still, as you say, a big risk for disappointment when the real discussions about what is going to happen with the territory are going to take place here.
Yeah, especially as Russia seems to be ploughing on through a lot of Ukraine, pushing on all fronts on the ground. So even a ceasefire of aerial stuff is not going to stop the ground war. So that's not going to stop him keep moving forward. If he's making those gains, he doesn't necessarily need missiles hitting Kiev to push forward on the ground, 80, 90 miles away.
Oh yeah, definitely. But again, if let's say the western side of the conflict, Ukraine, Europe, US perhaps can stall things now a bit. As I said, we are not too far away from the potential winter starting in Ukraine, because it tends to get really cold there. So maybe on the ground it's going to stall a little bit as well. But yeah, I mean, as you say, Russia is claiming more ground, and then we've got Russia, Ukraine, but then you were talking about those tariffs, an additional 25% slapped on onto India, and then we know that Russia and India are and getting closer and closer actually to each other.
Yeah, exactly. That was going to be my next comment. We've had Russia's Secretary of State Shoigu. He's met his Indian National Security Advisor colleague or counterpart, saying that Russia wants to strengthen the strategic partnership with India, and that Putin is apparently going to be visiting India at the end of August. So it's pure politics in play here. We've had Trump slapping 25 on India and punishing them for taking Russia oil, and then 5 minutes later, Russia and India are speaking and announcing Putin's visit over there. So all these games are going to continue. But let's hope for the best from any Trump-Putin meeting next week. But I'm not expecting any miracles from that. Right, it is BOE Day, Bank of England Day, and a cut is expected, which will take the rate down to 4%. In the market's eyes, it's pretty nailed on. They should cut. They could have cut a couple of meetings ago, and it wouldn't have shaken the tree at all, but it looks like they may do it again. The market is leaning to what I've been saying, that if they do cut, it's going to be a heavy vote for a cut, i.e. it won't be a tight one like a 5-4 or something. A lot of expectations looking at an 8-1. What I'm going to do is just show you the breakdown, because what it means for pricing, because my old mucker Mr. Brown has gone through all the banks and whatnots to show how they see the vote split. So this column is the unchanged, this column is in the middles of 25s, and this column is the 50s, which is going to be pretty important. There's not, despite those numbers, there's not, where am I going? There's not, they're not showing the split here anyway, for the 50s and 25s. So we're expecting a heavy vote number here. So that won't be the shock. The shock will be if it is a tighter one, say a 5-4, maybe even a 6-3. These 50 cut people, it's probably about, I think Pantheon voting for, or saying there's going to be 3 votes for 50, might be pushing it a bit too much. I can't see anyone outside of the usual Doves, Dingra, and maybe Taylor voting for a 50, unless Mann wants to pull another 180 and decide she's going to vote for a 50. I don't know. I'm thinking 7281 is probably the right number. Possible we get a 9-0 as well. So really, we're expecting a cut. We're expecting to be voted for strongly for a cut. What we need to know thereafter is this the start of a cut phase, or is this just a one and pause? Because they still have the inflation problem, and that is the big conundrum with this. A bit like the Fed, they're seeing jobs growth coming down, unemployment rising, the economy weakening a bit, but then they're seeing inflation going up. The BOE's mandate is inflation. It's not jobs. They don't have a dual mandate. So that's what they've got to adhere to. So as usual, rock and hard place. I don't know what we're going to get. I don't know if we're going to get a cut, an indication of a phase, or whether it's going to be a one and pause. Could they do a 50 today? I think that would be a bit strong. It would be a shock if they do. But as I say, it's all to play for in this one. Kay, what are your thoughts?
I'm surprised nobody in there goes 8-2 for 8. No, sorry. Oh, yeah, BNP has the 7-2. Yeah, 7 for the 25 and 2 for the 50. Dingra is for sure going to go 50. Yeah, that mandate. We've seen with the ECB as well. The mandate is for price stability, but they can't keep away from talking about the, let's say, I call it the hidden mandate, the non-written mandate, which is their worries about the growth and the economic data as such, besides inflation. And I reckon there is probably going to lie, in my opinion, the dovish slant. And Bailey is, in my opinion, going to pick up on it. So I'm gonna go for a slightly dovish, well, not slightly, but a more dovish leaning Bank of England today. More dovish than what inflation should dictate them to be. That's what I mean.
Yeah. And it is a forecast meeting as well, so we have to those to deal with, and we'll get a hint on whether they're going to be more dovish by what they see in inflation. If they completely brush this rise in inflation and brush it off under the carpet, so it's going to be the old dreaded transitory, then we will be definitely probably getting a more dovish slant from the bank. But I do like to sit on the fence, play both sides of the coin in terms of what inflation may do. Lots of uncertainty language, lots of risks language, and we'll see if Bailey's lost any more weight while he's been on the old weight loss injections. Right, that's it from the headline front. If you've got any questions about the BOE, ask Kay.
Fast. No, but we have to, Ryan, we have to talk about Banxico tonight.
Oh, yeah, Banxico.
We have Banxico tonight. So very quickly, oh, hang on a minute. Is it? It is tonight. Yeah, it is tonight. So they're expected to cut 0.25%. They went from cutting 50 last time to a little more fence sitting, but if everything goes as expected, inflation going towards the 3%, etc., inflation actually is coming out today as well. Not sure if it's going to impact their immediate decision, but they will have it before having to make a decision. So that could impact it. But it's widely expected to go for another 25, but like a kind of a cautious cut. Inflation has been a bit sticky of late, so we are not yet at their 3%, but it is expected to come down. So if they see it coming down close enough to where they are, it's really going to comfort them in a cut today. Well, the bad surprise for maybe, I don't know, is that inflation being a bit too sticky and they stick at 8% for them. But also, the uncertainty, Scheinbaum still trying to get trying to be nice to Trump. I think they will just deliver their 25 and then we'll see. I don't think, especially now, there is a 50 on the cards. That would be the dovish surprise, of course. And it's going to be interesting because of the level where we sit in dollar mix, obviously.
Yeah, there's going to be a big watch later on today. The old dollar mix, which is hovering around near that 1850 level. Yeah, we do get the CPI out as well. Not much else from the US. We do get jobless claims, which have been of a no. That could be a bit spicy if we suddenly finally see that doing something in those jobless claims numbers. So don't rule it out. But otherwise, it has been doing not a lot for a long time. Okay, how was that? Did you see that 10-year yesterday? How did that go off?
The 10-year yesterday, I think we had a bit of a tail there. Wasn't great. Wasn't great at all. Actually, was not really very good. We had like a full BP tail, and the pickup, the bid to cover ratio was only 235, where the prior one was 260. So, no, it wasn't a great auction at all. Paradoxically, rates have not, barring a small blip there, and yesterday you also updated on something, I think, flow wise, but market is still not comfortable in going full whack bond buying, and I think that is still the tariff overhang. And the tariff overhang and the fiscality as well. And we know that due to the pushback again on the spending limits and stuff, Treasury is likely going to increase auctions as well over time, and I think that's really holding back the market for going full tilt bond buying. And I see actually calls for both sides. Bonds could go up or down from here, and it's all going to depend on where, if people can fast enough make the calculations between receivables and payables and etc. It's going to be a game of income and expenses.
Yeah, very much so. Russia's press have just issued a correction. Putin's not expected to visit India by the end of August. He's expected to visit by the end of 2025. So he's still going over there, but it won't be this month, according to
That's
that
another
news.
little positive.
Yeah, potentially, depending on how you look at it.
And exactly, but that's the thing, because now we look at positives, etc., and the people say like, oh yeah, I mean positive, the correlation between the let's say the positive stocks and the lower dollar. But I'm not sure when we talk about geopolitics that we need to take it for granted, because that's what I said in the room. Imagine that US brokers a truce, and people say like, yeah, okay, that's very positive for the euro. Yes, because the euro is closer to Europe is closer to the action. But psychologically, is it not a little bit positive for the US as well? Because it's the US who brokered the trade, and they probably, knowing Trump, are going to get something from it as well.
Yeah, absolutely. They'll be piling in American construction companies into Ukraine. Probably that'll be part of the deal, and that'll be a big boost. So yeah, we might get a new version of risk. It could be risk on dollar.
Yeah, we should, we should be a bit careful there, I think, with the way we handle dollar versus risk in for that particular one. I'm saying.
Yeah, well, let's cross that bridge when we get to it, eh? Long way to go yet before we get anything. Right, well, while I'm on the 10-year yield, might as well keep a beady on that. It's still holding above this 420. It's had a couple of little knocks through. So might need to make it a little bit of a zone there down to 418. But we are grinding higher. This spike was, there was a bunch of contracts, 60K's worth of contracts went through in a quick fashion yesterday afternoon, which caused that spike in yields. But we are creeping back up. But as I suspected, it's not in any rush to go zooming up. at the moment. So still looks like anytime we get a rally in yields, it gets a little tap on the head. Dollar yen looked a little bit disconnected from it this morning. As you can see, we had this little move back under 147, and it hasn't lasted. We've climbed back above. Again, that's really coming with these risk headlines as well. It was a bit delayed, a bit belated, but it's jumped on that bandwagon as well. It's looking a bit solid down into this 50-60 zone again, because we didn't quite get down to that prior low. And to say back above 147, so we're not managing to stay on this 147 level for any length of time. So it's proven an interesting pivot point. 60s on the top side, 60s, 70s on the top side, also playing a role the last few days. Just a bit of an intermediate line that we've turned around quite often, and we couldn't get through there several times since Wednesday or through Wednesday. Maybe we get out there this time on these headlines, and that'll be the one. Okay, I think it's important that we're going to need to see what the US does with all these fresh headlines.
Yeah.
Whether they jump on board as well.
Yeah. As we said earlier in the show, Trump Besant, I don't know who is going to come up with it, or the White House, one of the White House speakers. If they say like, no, don't worry, I mean, you're only at 15%, all of a sudden we could have a bit of a steep drop there in all things yen. I'm a little long in the cross, but I'm keeping it very tight, and I've already been trading it around a little bit on those headlines, because any line where Trump, for instance, comes out and says like, no, it's only 15% all in, we're going to see a reaction to the other side in the end. If sorry, there is no clarification though, then you're talking about a weight on around the yen's neck. Plus, when you look at equity markets rallying again, although yen and risk of late is a bit of a wonky correlation, right? But then still, if there's no clarification or actually a clarification that it is actually 30%, then the yen is going to get another slap around the ears, I think.
Yeah, and then we've got how the US reacts to all these Russia headlines as well. So lots to be taken into account with this one. I want to have a quick look at stocks, because we are motoring it up. Could be heading for another crack at the all-time highs. It was asking us the other day whether we were going to, which way stocks was it? Dale on Face was going to was asking us. Yeah, pretty much everyone was saying it's going to be all-time highs.
Was it Dale or Blake? I don't recall. Yeah, one of the two was asking us. I think it was actually Blake, though.
Yeah, it could have been Blake. And the resounding response is that we're probably going up to all-time highs, and we look to be on the way. And those risk headlines certainly might be helping it along as well. So we could see this do a bit of acceleration again when the US comes in. So it's going to be important to see that session when that starts. Right, a couple I want to look at. Dollar MEX, I've been saying, talking about looking for whether we get this 1, 2, 3 pattern. It's trying at the moment. Okay, this is one of those things where if it works, you come back to it and you look at it in 6 weeks' time, and we're trading up at 19s or better if it holds. But right now, we're still building this out. Okay, I've added a little bit back at around about 1860 and change. I might have a little add back somewhere between 57s and 55s. But if we do hold either one of these for any decent amount of time, then we could be looking at a more significant bottom in play, and then we could be looking at turning around some of this trend that's been heavily bearish all year. There's really 3 levels that are make or break here, where we've just hit a bottom here at the 57s, this 55s, and then down at the big 1850s. So there's 3 chances to get a bottom in play, or it all fails and we're going to continue on going lower. Kate, I don't think there's going to be any doubt about it. I mean, we've got the Banksco, so take that volatility afterwards. But I don't think there's going to be a doubt about this. Either we're going to break and go, or we're going to hold it.
Yeah, I don't have a position, but to me, this looks like sooner or later it's going to break down. And just because of the speed by which we came back down to this level. And if we would have been mooching around longer in those 1870s, and then that would have inspired a bit more confidence. But the speed with which it came back down here,
Yeah.
that doesn't inspire me personally confidence to get long of it. And then I wouldn't do it before the Banxico anyway, but maybe after if they are dovish enough or see risks developing other than inflationary or so, then because they do talk about, and that's the interesting thing with Banxico as well. They do talk about global scenarios as well, and a bit like who else is doing that? Oh, SNB is doing that, and Norges Bank, etc. They are doing that as well. They talk about the general situation as well, and there's always something to take from it, and that is where I'm a little bit worried if they would say like, oh, we do a quarter and then that's okay for now. It may be that even with a quarter percent reduction in the interest rate, the dollar mix still goes down. Uh,
Yeah.
so I'm a little worried. Yeah, I put a gun to my head, and I think it's sooner or later going to break. Um, Trump is
But
doing something there. Will direct Labor Department to reevaluate guidance around. Oh, I said alternative asset investments. Okay, whatever.
yeah.
Uh,
But this is yet another currency where the central bank have been cutting all year, and the currency's done nothing but strengthen.
mm. Yeah, I mean that's it's still because the thing is and same can be said for Canada. Although the Canadian dollar is weaker comparatively to the mix, is weaker. Okay, there's a bigger fight going on there. Although we could argue that immigration, etc., fentanyl is a big fight as well with Mexico and the wall, etc. But it does seem that U.S. companies as well have been milder towards Mexico because they need the flow of raw materials, etc. So it does seem that they have a little bit of an advantage, the Mexican peso and the Mexicans. And also, we can't forget that even if you slap 25% onto Mexico, the USMCA rules, they're ruling out a lot of tariffs, and you're not looking at 25%, or I'm just spitting out a number. I don't know exactly, but you may be looking at only 15 or 10% all in all. I've even seen somebody float the idea of, oh, basically they are just paying 6%. If you take away if you take into account the USMCA rules. So there is
Yeah.
still stuff going on for the mix. And then yeah, it's less now, but I don't know. Max Yen is Mrs. Watanabe and sons and nephews not still engaged over there either, because you still have a good carry between Mexico and a fair number of other currencies.
Yeah, exactly. Right, I'm going to pass it over to you. As I do, there's the other side of the coin as well. That if the US are going to start cutting, then we're going to see the carry rate stabilising.
Yeah,
Because if the Mex cuts and then US
yeah,
cuts and whatever.
yeah.
So yeah. Right, over to you, mate.
Okay, so we had this move in the euro dollar bit, also pushed up by euro crosses. We have seen virtually all the euro crosses being very big actually over the past sessions, and you name them. Well, I mean, maybe apart from one or the other exception, I haven't seen. But all crosses have been pushing higher. Been a lot of positivity flowing in the euro, but as I've said yesterday, from this zone onwards here, somewhere around 116, and if you take the shorter side of it, the lesser decline just after the US EU deal, from somewhere 116.40s up to 117.15. I think we're coming into a bit of a resistance zone. Not only the trend line is coming in there, but also prior highs. Here spikes. we need to start to be a bit careful, because the market is not going to be one way, and it would enter into that framework, or that pattern or framework, whatever, that I was kind of looking at. Yes, the big drop and then the rebound. Are we not starting to build the summer range? Obviously, with all those headlines flying, whether it be geopolitics, trade news, whatever, blah blah blah, it's going to continue to move. But I would not really. I'm in this kind of mindset where I think that perhaps for a while we are going to range. It may move like a big figure at the time inside the range, but give and take, this could have been a spike. This could have been a spike. Are we not like somewhere between 115, 114 and a half, and 117, 117 and a half? Top end maybe 118 max. I think we may be starting to build a bit of a range there, because if you look at the economic data, and Ryan was mentioning those German what was it this morning? The industrial production. I mean, it's still a massive negative, right? So and the economic data in Europe are not yet warranting too much of a strong euro, okay? And also we were talking about, if the US manages to negotiate a truce between Ukraine and Russia, is it not going to actually be a bit positive for the dollar? So I am thinking that we may start to build a bit of a range there. So we will see. We will have more data out next week, inflation in the US, etc. So, but start to respect. I would say I am going to be doing it anyway. We're starting to respect those top ends and those bottom ends here, and maybe more looking like a rangy market going forward into August, until the inflation at least. We will see then, or more meetings. Okay, cable, Bank of England. We are in the zone. And this is going to be important. This 133.65.75, give and take a few pips, is going to be important for the close of the day, I think, today. We have seen the sterling undershoot the euro sterling trading higher. By the way, it's coming back down just now a little bit. I think people taking profit ahead of the Bank of England. But this close here, above or below this pretty fat line around 133.65, is going to be important, whether we are above or below. If we get a really dovish report, I think we can be in for a retest anywhere between 133.15, 132.85, and then it will be back over to the dollar, I think, to decide with stuff, unless really we get like a big vote in favor actually of a number of 50s, but that's still a bit in doubt, barring Dingra, sorry, and Taylor perhaps. Then Okay, sorry, my phone was just ringing. So yeah, I think back down in this zone, unless really something dovish happens, it should be enough. If we get a less than dovish picture, we could see 134, sorry, 1520. And again, we're looking at the global market now as we're seeing euro dollar coming back down, etc. Will it really have the power to go on here and have a look at 135s? That will again depend on what the dollar does this afternoon. Okay, so I'm really thinking maybe we see this and then gradually come back a little bit, but yeah, I'm expecting a mildly dovish. So I would say we are going to close somewhere more around here than around here. But obviously, Bank of England and then the dollar will decide upon it. Okay, we need to look at gold, and then just I want to show you. Okay, because we talk about, and haven't been really charting this thing, but we talk about it on Face as well. This is the gold silver ratio, and this is what happens when you get better news on the risk point of view. I've been talking about this for quite a while, and saying that I think that silver over time is going to perform better than gold. We have had the example again this morning. Okay, what I mean about this, silver is an industrially used metal. It needs a bit of a better global perspective in the market than when everything is going pear-shaped, in which case gold is the one that is normally outperforming. So tariffs, the weaker dollar. Yes, we had this spike up in gold, and which something I usually never do is go on an even shorter time. This is the US, or this is the US Russia potential meeting announcement. Okay, look at this move, right? So you understand what I mean when I say that gold is a hedge against all bad things. When some better news comes out, this is the reaction that you have. I just want to show you this as to just to explain what's going on in markets when you trade one instrument versus another instrument, um, comparably, which one can do the better. And you look at silver, it hasn't had that reaction at all. We had a quick blip in sympathy with gold, but we're already back to where we were before. So this is just an illustration of how I look at markets, in fact, and when I'm choosing one over the other. And I still think we are in this situation where, to me at least, silver could still outperform gold. 37 3 quarters, 37.90, that's where it really has to hold today. So unless the dollar really recovers a lot, I think that this level should be holding. Last one, but I'm looking at the clock, and this is really Euro Swiss finally on the move. We had this bad news, I would say, for Switzerland, where the Swiss president didn't manage to get a meeting with Trump at all. The market continued to buy Euro Swiss. And also this, it's actually trading back at 94, the figure right now, because I think we're seeing some profit taking there as well, or unless I missed some headline or so. But we need continuation here. Huh? We need continuation, and actually, as we speak, it's we're actually trading right around 94, the figure, which is somewhere where it should be holding. Max 93.60, of course, to continue to push higher. Also, it could be that risk is also a bit supportive for this, so watch some of those risk headlines, and obviously watch what Trump has to say about that missed Swiss president visit also yesterday. But it does seem to want to get moving a little bit. So this would be a positive development if we could close the day above 94, let's say figure 10ish. All right. And with that, Ryan, back over to you, mate.
Thank you very much, sir. And we'll see you all for Face Show later. And if you've joined up, we'll see you for the risk management webinar later on this afternoon. Don't be late. I'm going to have a... Kay, you getting a special shirt on for that one?
Nah, not really. I mean, I wouldn't want to outshine you, mate.
No one can outshine me, mate. Have a great day, everybody. We'll see you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.